We're joined once again by Rob Kaplan, the president of the Dallas Federal Reserve Bank, and we're in Houston, Texas today for an energy conference. Rob, thanks for joining us today.
Thanks, Peter.
On FoxBusiness.com as well. I want to follow up a little bit on our air discussion. Yesterday, Chair Yellen said, among other things, talked about it is appropriate to raise rates relatively soon, as long as the incoming data provides further evidence of progress towards the committee's objectives. But she also said the committee, the FOMC, must remain forward-looking in setting monetary policy, and she talked about the risks of delay. How do you feel about that? It sounds like she was teeing up December.
I agree. And so we're all careful. I don't speak for the committee, but for myself, I think her views and what she articulated is consistent with my views at this point.
So there are a risk to delay here as far as potentially if the economy overshoots, the FOMC might have to abruptly raise rates, and then there's
trying to avoid that
instability.
So leading up to this point, I have not up to this point seen a risk of overheating. And the reason is we've got a few secular headwinds, the biggest of which I talked about on air, is demographic. But we're going to get new proposals. Those new proposals will, broader economic proposals, which will affect this dynamic. And we've got to watch how they unfold. And depending on what they are, that could change our view about the risk, and my view about the risk of overheating, and could have an impact on the path of rates. At this point, I'd say gradual, patient. But I think I'm open to the fact we're going to get new proposals and we're going to have to assess them.
Because this gets to this whole debate about potentially getting behind the curve on all this. And she said that yesterday that in her testimony that she felt that the risk appeared limited at this point of getting behind the curve.
Yeah, and here's why I'd have up to this point I'd have the same view. While we're making good progress on employment and inflation, and we're still lagging behind 2%, there's a reason, in my view. And it's one, aging demographics, but number two, globalization is having a big impact on inflation here, in my judgment, particularly overcapacity in China. You also have a significant trend, technology-enabled disruption, which is limiting pricing power of businesses. And the other thing you've had 8 years of deleveraging by the household sector, which has also had some effect. So I think for all those reasons, I think we're moving ahead. We expect 2% GDP growth in 2017. That's not overheating. I'd like to see higher growth. It's possible we will with broader economic proposals, but my view, that's stable growth, but I think we can move gradually and patiently with this level of GDP growth.
I had one other question too, which is that are concerns about proposals in Congress and with with the new administration, the regime change that we've seen. And I've talked to other Fed Bank presidents about this, and so has the Chair Yellen. Are you concerned that there are risks to the Fed's independence going forward with these kind of proposals?
I guess I'd say I hope not. I think reforms and revisiting the way we operate is a healthy thing. And I think any good organization, in my experience, any good organization is going to do that. But I think the country needs to protect the independence of its central bank. It's been an enormously valuable asset. Doesn't mean what we do, at times what we do is very unpopular, but we've historically done what needs to be done. We have a group of people around the table. Politics, everything I've seen doesn't enter into it. I think it's an enormously valuable asset to the country, and I think it's very important that we protect that independence.
Just last question. We've talked about the outlook and the economy and everything else. What keeps you up at night? What could knock that outlook off path?
Well, for most of this year, my worry has been these big secular headwinds, I think, are much more powerful than is widely understood, and therefore the so-called natural rate of interest is much lower than is widely understood. This is a different economy than 10 years ago and 20 years ago and 30 years ago, and I think part of our job, what worries me, I think we've got to continue to explain that. But the other thing then now as we head into 17, I think we ought to have broader economic policies, but they have to fit the economy we have today, not the economy we had 20 years ago or 30 years ago. So whatever policies get developed, they have to be based on the dynamics of this economy, which is dramatically different than the one I grew up with in my career. And a lot of my last 14 months in this job has been digging very deep to try to understand how this economy is different. And I'm still learning. And so anybody that comes at this with new policies, you just have to really do your homework. And that's what I'm hoping for as we head into 17.
I think we've covered everything. Thank you.
All right. Thank you,
Kaplan.
Peter.
Thanks for joining us on Fox Business.
Good to be here.
Appreciate it.